Hi folks, Nick here recapping the day, Monday, April 6th. Long weekend, scary news on Friday, markets were closed, markets reacted in the futures negatively. We opened this morning to a futures, actually woke up this morning to futures picture that looked like minus 10, 15 points. It was going to be good on the ES. The S&P, so to speak, and indeed the open was completely rejected and markets turned a scary pre-market action into a fantastic rally. So we had a really good rally going, and mostly on the backs of momentum stocks like Tesla, for example, was up almost actually more than 8% in the morning. Netflix, Amazon, Priceline had a good mention. Tesla rose on fundamental reasons, comps numbers out of the blue, good sales. You can't blame that. 8% maybe overdone, we'll see. Short squeeze perhaps. And it doesn't look like it's been increased in shorts, meaning it's been this short for the last at least 6 to 8 weeks, so 4 or 5 days to cover it, theoretically speaking. Priceline had a good mention, initiation with price outperform probably or something like that, but the price target was like $1,450 or something like that. So obviously right now it's at $11.85 after today's move of $25, 2% up on the day for Priceline. So momentum stocks ran, Apple ran. We had a lot of green everywhere. It was hard to see anything red. So that was the reason in the morning where everything was rallying. So it was a market-wide rally, not so fast. And let me show you why. You know me, what I say. Okay, markets are green, but really markets are not until you see this. The S&P, the small caps. The small caps lagged all day. They were green, but they were plus 0.3%, plus 0.4%. They were not plus 0.9%. They were just as half, and at one point they were 1/3 of the exuberance in the NASDAQ. The markets closed 0.66 up on the Dow, the SPX, 0.81% up on the NASDAQ, and 0.39% up on the RUT, which are the small caps. That's a basket of 2,000 stocks. So we need to listen to it. They're not saying run for the hills. They're just not as happy with bad news. So now we have people pricing in moves upwards because of bad economic news. So bad economic news, the jobs report on Friday, equals good stock price moves. But how much can you rally on that? Where's the follow-through going to come? So for example, if I go to the NASDAQ, okay, today we had a move of 3% in Microsoft. Look how big Microsoft is, 3%. Apple, almost 2% at one point. Facebook, almost 2% at one point, up 1%. Priceline, over 2%. Amazon, almost 2% at one point. Look at this. I mean, you can count on the hands which ones are red. So they were big boxes, okay? So where's tomorrow follow-through going to come from? Let's look at it, the S&P. Again, it's even better in the S&P. There's like 1, 2, 3 red, and these are flattish to a little bit red. Meanwhile, Coke, over 1%. Wells Fargo, about 1%. Look at these. Energy blew up. Chevron, Halliburton is up almost 5%. Apache, over 5%. ConocoPhillips, that's the big box, almost 4%. Exxon, flat to down. Big box, yes, but it doesn't contribute negatively, at least, right? So where is the follow-through going to come from? Why are energy stocks up? Because of oil. Oil spiked today, up 5-6%, but look where it failed. It failed where it's failed before, several times. However, one can argue that you have some bullish setups, right? Failure deeper, failure more shallow, so higher lows knocking on this roof. Will the roof yield? And if it does, I think $57 is easy based on this technical setup, right? So we'll see if it happens. This probably was fueled by the low dollar. Today, dollar was low. Euro was strong. Actually, I think everything was strong against the dollar. So this could have helped to fuel the energy on top of the momentum, on top of a few write-ups on Microsoft and Priceline. So there was exuberance and bad news. So now we have a lot of people pricing out the move, that rate hike to 2016 again. I think they're misplaced. I could be wrong, but I think it's misplaced faith in the fact that Yellen will not move this year. I think she will move this year, even if it's data dependent. She told us last time she spoke that she might move against the data. Okay. Maybe they have reasons to want to push the dollar down. I don't know what their political or behind-the-scenes reasons, but there might be some misplaced faith in here. All right, so political, on the sideline today, there was not much talk about it. Economy, bad news is good news, apparently is back in the mode. I don't like it. Fed rate hike and Fed talks. Oh, for crying out loud, can somebody just muzzle the Fed? They're talking every day. We've got somebody in the Fed saying something, and they just contradict themselves. Somebody's bullish, they talk to bullish. Somebody's bearish, they talk to bearish. They should just be quiet. They're talking too much. Currency, we've already covered that. The QE in Europe, still the same. No news is good news, I guess, going on until we don't need it anymore. There was some good news on Greece. Apparently they said that they would meet their obligations for this month, so I guess that's good news. No default this month. Again, eliminating a potential bad news. Oil, huge rally today. Let's see if technically it can break out. The TLT and the TNX, those are the bonds, and let's start with bonds. Today they reversed a green open to turn and close at the low of the day almost. So their breakout, they've been held by this rectangle right there. Lower highs, lower lows, that does not look good, right? So let's see what they do after here. The breakout is breaking apart. So the TNX, which are they should move in opposite directions than they did today. That represents the 10-year yield. And today was green. It reversed a very bad open and closed almost at the high. So that's pretty bullish. However, we've seen this before. They're still trying to cover that, close that gap, that green thing right there, and coincides with this line I drew there. Not a scientific line, but thereabouts. So we're struggling in regaining the 20. 20 is a 2% line for the 10-year yield, right? So we'll see if they can muster any strength behind that. All right, what about the ranges? As far as the SPY, which represents the S&P, obviously, we said we need to bounce off of this green line. That's a 2-year-old line. I want it to hold. 205 definitely holds. It bounced, really strong candle, broke this lower highs, correct, because we closed up here. Now what? Now we're failing at exactly the same place where we had two big red candles. So I need to see which had been support prior and failed here. I need them to see re-break out into it closer to this line, eventually to get to that line and this line, right? You see how the trend up, but we need backup. We have a good setup for it. This was on decent volume, so we need backup. They need to back it up with another good day tomorrow. It's imperative, in my opinion. The small caps have been the closest to the breakouts. This is the all-time high. Look how close we are. That's a really good candle. Higher low, higher low, higher low, higher high that failed, but higher high, higher high. So still very attractive, and I like this to extend it. All right, and we could be headed for new highs. However, we do have some resistance in the open interest based on the RUT. It starts at 1260. 60 or 70, I think. I don't know. Look at your opening note from today and tomorrow, the one you will get. So we're still holding, but less exuberant these days. That's 2 days in a row, Thursday and today, they lagged, especially into the close. That's something new. I pointed it out on Thursday write-up, or the recap that came on Friday. How about the Qs? That's the NASDAQ. The NASDAQ is still in trouble in the sense where it's below the trend. Even on a huge day for Apple. Well, the good thing is today, bad thing is we pierced it. Good thing is we've done it before without repercussions. The good thing is that we closed towards the high end into, we didn't close under the line. So let me zoom in. We didn't close under this orange line. We closed high above it and almost exactly at this lower high thing. So good news, bad news there. The good news is we have Apple. Seems like everybody wants to buy Apple because everybody believes Apple is going to $1 million, and it probably is. Technically, it has some targets at 140, so if you want to go along the market, why not go along Apple calls? I would give myself time to be right, though, even leaps. All right, so those are the ranges that are at play here. All right, so what about some tickers? I spoke about Tesla, right, and let's visit Tesla and see it in pictures. A fantastic breakout today. Wow, bam. However, look at the high of the day was over this green line, which I was happy about, and it did not hold it. So what now? Why did it fail at the top? Well, it was a huge bounce. So let's give it another day and see what they want to do. And this is, if I extend to 1 year, you can see why this is drawn. It's from the high to the high to the high. So we're lower high, lower high, lower high, and lower lows. So we have a descending channel. However, we do have 2-3 times support at this area right there. So 185, 80, 85 has been well defended. But God help them if they fail it. So we'll see what happens here. I need to see a follow through there. Somebody asked me about Triple D, you know, the 3D printers. I'm not sure what to do with that. And they want to do, I mean, this is just an ugly, ugly trade as far if you followed it. Wow. So this is the 2 years ago. Here we are, same place. So zooming back in, I think 46 debit call spread would be just hoping. And if you're exuberant, I don't know much about their fundamentals. If you think somebody's going to buy them, like HP or something, debit call spread, I guess. First hurdle is they cleared it today with a breakout. Second hurdle should be between here and here, so 32. And if they break the 32, then they might be gunning for this one right here, right? But that's so much exuberance up there, or maybe this one. So let's extend this one, see where that touches. Okay, they break that one out today. But this is an area where they faltered before. Look, 1, 2, 3, 4, 5, 6, 7, right? So let's see what it does right here. That's Triple D, and I've spent on that one. Qualcomm, that's an important company. Today it had bad news because, oh my gosh, somebody broke open the phone and they didn't find chips in there. 2 big red candles. So today it closed a lot better than it could have. So somebody said, do you want to do credit call spreads? Well, it's kind of too late if you want to short it. If it loses 66, this might come fast. So if you want to short, I can argue both ends. So it's a no trade for me. I definitely cannot do a credit call spread or credit put spread. It's too late to do a credit call spread, too soon to do a credit put spread. I want to see what the next candle is. It's a good company with a lot of cash. It just settled a huge lawsuit, so debit call spread might be the right thing to do here. Another big company that's well liked is Gilead. Talk about a doji, indecision. So nobody knows what to do there. So now the range is tightening. You can argue it's between 102, whatever that line is, 102, and this dashed line, or this one. Depends on which trend you want to play. This one has been pierced before right here, but if I ignore it, sometimes I do that, then we are likely to get a bounce or break down. If we lose the 97.75, 97, whatever that line right here is, this may come fast. If we lose this, this may come fast. So that's like a 3-step process. If they break out, if they get to 102.550, then they may reach this one again and shoot for new highs again. I'm not that optimistic. I see lower highs knocking on a floorboard. If markets in general correct, this one will head lower. But I don't oppose it. All right, that's Gilead. See this line right here, this rectangle is in play. And we'll see what happens. Somebody said, oh, let's catch the VIX. Is it, it's nothing to be caught when it's continually going down. This is a negative trend, so it's not a drop, a correction. I don't know. It's just a continuing trend. Why would I want to catch this? It's hard to monetize the VXX for me, so I stay away from that. But if you're hoping markets are going to turn down, the debit call spread can pay you really quickly. Look how fast it spikes. You can do the VIX straight up too. Teva Pharmaceuticals today, I think, had a good mention. Boy, it was up more than that. But anyway, it closed above the yellow line. That's technically a breakout, so let's see how much more it can add to it. If you're exuberant, those stocks, you know, that the debit call spread could pay a lot. GLD, gold, bam, today. Again, probably currency. Look at this gap up. All right, that's good news. Bad news is coming up into this box. So what's it going to do against previous areas where it's fallen before? So if you have longs, you can book some, and I don't have an opinion either way. It's a rigged market. It's above my pay grade. I don't touch it. Microsoft, we already mentioned, had an update today on a mention. Look at the size of that candle. Great candle, right? Came exactly at the time it needed it. Had it lost this area right there, this one will come and play really quickly. But now it still needs to put in a higher low, because this one, lower high, and higher high it needs to put in. So we have 2 lower highs, 42.50. If it closes above 42.50, then I'd be excited about getting to 44 again. But until then, it's just a green candle and a downward trend. So let's see what happens. Most scary chart of the day is the IYT. These are the transports. This could be the fact that oil is up so badly, right? But the fact that it broke down today and broke the levels of support, is it going to 145? And here's the other part where if I do IYT here, see this purple line are the S&P. S&P is going up 2 weeks now up. Well, this is the second week, and the IYT going down. I don't think you can find another one. I don't think you can find another correlation period like that, where one is going one way and the other one's going. They always move in tandem. At least I'm looking at it visually here. I could be wrong. If you know any more about it, if you want to chart it better than this, go have at it, and then come back to me. All right, so did we close on the highs? No, we faded into the close. Even Apple was running up. We faded into the close. Does that mean it's a disaster? No, we had a green day. This was a bullish day, but there are caution notes in there, so don't chase everything. Be cautious what you chase.